Please subscribe, like, and comment.
Welcome to the deep dive. So lately, I've been thinking quite a bit about something that might be on your mind too. It's, how do gold and Bitcoin really stack up against each other, especially for the long game? We're talking about keeping our financial footing solid, maybe seeing some growth down the line.
That's a great question. And you've been digging into what makes these two, well, quite different assets tick, haven't you?
I have, yeah.
So our mission today really is to get under the hood. Gold and Bitcoin, look at the good, the bad, maybe the misunderstood aspects.
Filter out the noise.
Exactly. Give you a much clearer sense of how they could, potentially fit into your own financial strategy. And we're basing this on a pretty detailed look at their core characteristics.
Okay, sounds good. Let's kick things off with the classic, the time-tested one.
Yeah.
Gold, the one with like millennia of history.
Right. Gold's story is, well, that's pretty remarkable, actually. We're talking about something valued for over 5,000 years. Just wrap your head around that.
5,000 years, wow.
Yeah. Ancient civilizations. They used it for everything. Beautiful jewelry, sure, but also actual money, a symbol of power, of wealth. This wasn't some, fleeting trend.
No.
It's held meaning across so many cultures, vast stretches of history.
And it's not just sitting in museums, right? It's still relevant today.
Absolutely. And here's where it gets really interesting for investors today. Even now, in our digital world, central banks, loads of them all over the globe, they hold significant gold reserves.
Still. Why is that?
Well, the key takeaway is that across totally different political systems, different economic setups, gold just keeps its relevance. It says a lot about its enduring nature as a way to, store value.
Okay. So looking at portfolios today, what's gold's main job? Why do people still put it in their mix?
The crucial thing to get is its role as a safe haven. Think of it like this. When the usual stuff stocks, maybe currencies start looking shaky.
Like a market downturn.
Exactly. Or maybe a currency is weakening, inflation is creeping up.
Yeah.
Investors often flock to gold. The idea is basically to protect their purchasing power.
Because it kind of holds its value when other things don't?
Precisely. Gold tends to retain its value even when other assets are falling. And the really important bit, it's not tied to one single country's economy or, what one central bank decides to do.
That independence.
Yeah, that independence makes it really appealing when there's geopolitical stress or just general economic uncertainty. So the key insight, gold acts like a sort of financial insurance. It protects your wealth when other things stumble.
Okay, that makes sense. So let's tick off the advantages. What are the specific plus points for gold?
Well, first off, historical stability.
Yeah.
I mean, compared to stocks, and definitely compared to crypto, gold's price moves have generally been, let's say, more modest, more stable.
Less whiplash.
Right. Secondly, it's got that long-standing reputation, an inflation hedge. Over long periods, gold has shown it can maintain purchasing power, and often its price actually goes up when inflation rises.
And you can actually hold it, right? It's physical.
Exactly. That tangible thing is a big draw for a lot of people. It's real. You can touch it. Then there's global liquidity. It's recognized pretty much everywhere. You can buy and sell it almost anywhere in the world.
Okay.
And finally, diversification. It's a really valuable tool for that. It often has what we call a negative correlation with stocks and bonds. Meaning, imagine the stock market tanks because of bad news. Historically, sometimes, investors then rush to safer things like gold, maybe pushing its price up. So one goes down, the other might go up. Say.
Right. They move in opposite directions sometimes.
Exactly. And that can really help smooth out the bumps in your overall portfolio. Less volatility overall.
Those are strong points. But, okay, the downsides. What are the drawbacks we need to watch out for with gold?
Good question. Firstly, don't expect moonshots. Gold doesn't generate cash flow, unlike a stock paying dividends or maybe rental income from property.
Right.
Gold's return is purely about its price going up. That's it.
So, price appreciation only.
Yep. Then there are the practical things. If you own physical gold bars or coins, you got to store them safely. And that means costs, right? Storage fees, insurance.
Okay. Yeah.
And like we said, no passive income, no interest checks, no dividend payments, nada.
Zero yield.
Zero yield. And finally, while stability is good, it's also, a limitation. Its price can move slowly. It might underperform things like stocks, especially over long growth periods.
Right. Dependable maybe, but not going to make you rich overnight.
Okay.
Okay, let's do a hard pivot now. Let's dive into the digital world. Bitcoin.
The digital revolution.
Bitcoin. So it pops up in 2009. And its origin story is really key here. Created by this anonymous person or group, Satoshi Nakamoto.
Right after the financial crisis.
Exactly, right in the wake of the 2008 mess. And the core idea was, let's create a decentralized money system, peer-to-peer, no banks, no governments, no middlemen needed.
And that's where the blockchain tech comes in. That's the magic, yeah. Bitcoin basically introduced blockchain to the world. Think of it like a shared digital ledger. It's transparent, nobody can tamper with it, and it tracks every single Bitcoin transaction ever made.
Okay.
And what's just, well, mind-blowing is how fast it grew.
Yeah.
It went from this obscure little experiment worth basically nothing,
Pennies, right.
fractions of a cent, to, at its peak, a trillion-dollar asset class. And that's why people started calling it digital gold.
Because of the scarcity.
Partly, yeah. Like gold, it's seen as having a limited supply, and many see it as a potential store of value, but for the digital age.
You mentioned mined. How does that work? How do new Bitcoins get made?
Sure. So, unlike regular money that governments can just print more of, Bitcoin is mined. It's a process called proof of work. Basically, powerful computers solve these really complex math puzzles.
Like a digital treasure hunt.
Kind of, yeah. They validate transactions on the network, keep it secure, and as a reward for doing that work, new Bitcoins are created. But here's the absolute crucial part. There's a limit.
The 21 million cap.
Exactly. Only 21 million Bitcoins will ever exist. That finite supply is hard-coded. It's a core part of the design, fundamental to its scarcity.
Okay, so built-in scarcity. That's a massive difference from gold, where theoretically we can always dig more out of the ground.
Huge difference, yeah.
So what are the big advantages then for investing in Bitcoin?
Well, number one have to be the potential for high returns. I mean, the gains for early adopters were astronomical, exponential.
Life-changing and for some.
Absolutely.
Yeah.
And even with all the crazy volatility, Bitcoin has, outperformed a lot of traditional assets over the last decade or so.
Right.
Then there's that scarcity we just talked about.
Right, the fixed supply.
A fixed supply is a stark contrast to fiat currencies, right?
Yeah.
Where central banks can just, poof, increase the money supply, potentially leading to inflation down the road.
And the decentralization thing is key too, isn't it? No single boss.
Precisely.
Right.
That's core to its philosophy. No single entity controls Bitcoin. No government, no company. It's run by this global network of users and miners. Think about portability, too. You can store millions of dollars worth of Bitcoin on, like, a tiny USB drive, or even just memorize a secret phrase. Try doing that with gold bars.
Good point.
And accessibility. Big one. Buy, sell, trade Bitcoin 24/7. Anyone with internet can participate. Doesn't matter where you are, or if you even have a traditional bank account.
Those are pretty compelling points, especially the growth potential. But we absolutely have to talk about the risks. What are the big drawbacks with Bitcoin?
Oh, yeah. Volatility. That's the elephant in the room.
Yeah.
Without a doubt.
It's wild.
It's notorious for just extreme price swings, drops of 50%. Even more. They can happen and happen fast. It is definitely not for the faint of heart.
Need a strong stomach.
You really do. Then there's regulatory risk. This is huge. Governments everywhere are still trying to figure out how to deal with crypto, how to classify it, how to regulate it.
And new rules could change everything.
Absolutely. Future laws could seriously impact the price or even, restrict how you can use it. It's
Yeah.
still an evolving landscape. Big uncertainty there.
Okay. What about security? The network itself is safe, I hear. But what about me, the user?
That's a critical distinction, yeah. The Bitcoin network itself, amazingly resilient. Never been successfully hacked in that sense. But individual users, that's different.
How so?
You're vulnerable to hacks of exchanges, phishing scams, malware, or honestly, just losing your password or your private keys. If you lose those, your Bitcoin could be gone forever.
Ouch. Okay.
And finally, let's be real, adoption is growing, but it's still not like you can buy your coffee everywhere with Bitcoin, right?
Yeah.
Not yet universally accepted for everyday stuff, compared to, say, a credit card.
Right. Limited use cases still in day-to-day life. Okay, wow. A real study in contrasts. The old guard stability of gold versus the disruptive, let's face it, volatile nature of Bitcoin. This feels like a good spot to maybe put them head to head.
Yeah, let's do a quick side-by-side, break down the key features. So asset type, gold's physical, right? A commodity, Bitcoin's digital, cryptocurrency.
Origin, ancient versus 2009 modern.
Right? Supply. Gold grows slowly through mining. Bitcoin's supply is fixed, capped at 21 million eventually.
Volatility. We've hammered this one. Low to moderate for gold versus high. Very high for Bitcoin.
Inflation hedge. Gold's got centuries of track record. Proven.
Oh.
Bitcoin. Well, the jury's still out technically. It often acts like one, but it's debated. Shorter history.
Regulation.
Gold. Pretty well understood, generally quite minimal. Bitcoin. Still developing. Varies wildly country by country. Big question mark still.
How easy is it to get hold of them? Accessibility.
Gold, you can go to dealers, buy ETFs through banks sometimes. Bitcoin, online exchanges, platforms, digital wallets, mostly online.
Storage. Is physical vaults or safe deposit boxes for gold?
Versus digital wallets for Bitcoin. Often cold storage, offline, for better security.
Okay. Liquidity. How easy to sum?
Gold is usually very liquid globally, though may be tested in extreme crises. Bitcoin's liquidity is also generally high, but can get a bit choppy during big market freakouts.
Risk level seems pretty clear.
Yeah, generally lower for gold, definitely higher for Bitcoin, which leads to potential returns.
Modest for gold, potentially very high for Bitcoin, but with that huge risk caveat.
Exactly. That's the trade-off.
What about passive income or like transaction speed?
Neither really does passive income in the traditional way. Gold, none. Bitcoin. Well, there's this whole world of DeFi, decentralized finance.
Yield farming and stuff.
Kinda, yeah. You can sometimes earn yield on Bitcoin through lending or other protocols, but it's complex, adds new risks. Transaction speed, not really applicable to gold like that. Bitcoin transactions, they're getting faster with things like the Lightning Network, but base layer is still generally slower than, say, Visa.
Okay. And the environmental impact, we hear a lot about that.
Yeah, worth mentioning. Both have environmental impacts from mining. Gold mining has its issues, obviously. Bitcoin's proof-of-work mining uses a lot of electricity. The debates around comparing them are complex, but neither is impact-free.
Got it. That side-by-side really does crystallize the differences. They're almost polar opposites in some ways.
They really are. Different beasts entirely.
So, thinking about putting these into a portfolio, how should someone listening, maybe like me, the learner, approach this? Which one makes sense?
Well, it really comes down to you. What are your investment goals? What's your personal comfort level with risk? That's the starting point.
Okay.
So if your main goal is stability, preserving your capital, if diversification is key for you, or if you're genuinely worried about inflation or market turbulence hitting,
then gold might be the better fit.
Gold might be a more suitable choice, yeah. It generally appeals to investors with a more, let's say, conservative approach, seeking safety first.
Okay, makes sense. And conversely, when does Bitcoin start looking more compelling?
Bitcoin tends to draw in investors with a higher tolerance for risk, obviously. If you really believe in the long-term vision of decentralized finance, blockchain tech.
If you think that's the future.
Right. Or maybe you're younger, have a really long time horizon for your investments, and you're specifically looking for that high growth potential. Bitcoin might be more attractive then.
And the hedge against currency debasement idea.
Yeah, some see it that way too. A
Right.
hedge against fiat currencies losing value, especially in our increasingly digital world. But yeah, a core insight is Bitcoin's the moonshot opportunity, but you have to be okay with the potential for it to, blow up on the launch pad too. Risk needs serious thought.
It sounds like maybe it doesn't have to be strictly one or the other. Is there a case for holding both?
That's a really insightful point. And actually, yeah, many financial pros suggest exactly that. Don't necessarily choose. Consider holding both.
Oh, interesting. How would that work?
Well, the specific mix, the allocation, would really depend on your personal risk appetite again and your goals.
Can you give us some rough examples, ballpark figures?
Sure, just as thought starters, right? Someone very conservative might think about, say, 5% in gold, maybe just 1% in Bitcoin. The idea there is just a little diversification, a little inflation protection without taking on much risk.
Okay, very cautious.
Yeah. More balanced approach? Maybe something like 10% gold, 5% Bitcoin. Trying to get a mix of that stability and some growth potential.
And middle ground.
Right. And then someone more aggressive who can handle the swings. Maybe they stick with 5% gold, but bump Bitcoin up to 15%, maybe even more. Really leaning into that potential upside, but knowing the risks.
Okay.
And it's worth noting, some advisors generally suggest maybe 5% to 15% of an entire portfolio could be in alternatives, like gold and Bitcoin combined, just as a way to potentially boost returns and reduce overall risk through that diversification effect.
It gives some concrete frameworks. Helpful. Now, performance. Let's briefly touch on how they've actually done historically. Gold first.
Okay, looking back, say, over the last couple of decades,
Yeah.
gold's given an approximate annualized return somewhere in the 6% to 8% range, roughly.
Okay, steady-ish.
Yeah, but what's really key is its track record of holding up during big economic crises, preserving value. It's been pretty consistent at maintaining purchasing power over the long haul.
Right. And Bitcoin, the numbers there are probably a bit different.
Yeah, that's putting it mildly. Since Bitcoin really got going, around 2011 maybe, the annualized return has been, well, enormous, potentially 200% or even more.
Wow.
Huge GE caveat, right? That number is massively skewed by the crazy gains in the very early years when it went from nothing to something.
Yeah.
And you absolutely cannot ignore the crashes.
The 80% drops.
Exactly. Bitcoin has had multiple drawdowns of 80%, even 90% from its peaks. So yes, incredible potential returns shown in the past, but also the very real potential for massive losses. It went from like $1 to over $60,000.
Yeah.
But that ride was incredibly bumpy.
Very, very different risk-reward picture then. Okay, last big piece, the wider economy. What kind of macroeconomic stuff tends to be good for gold or good for Bitcoin?
Okay, for gold, several factors tend to help. Rising inflation is a classic one. People look for that hedge.
Makes sense.
Falling real interest rates. So interest rates minus inflation. If that's low or negative, gold looks more attractive because it doesn't pay interest anyway. Global conflict, currency crises. That flight to safety often benefits gold. And also, big buying by central banks themselves can support the price.
Right. And what about the conditions that tend to favor Bitcoin? What gets Bitcoin bulls excited?
For Bitcoin, increasing mainstream adoption is a big one. More people using crypto, more companies accepting it.
Network effect.
Yeah. Regulatory clarity can actually be a positive. If the rules become clear, even if strict, it can reduce uncertainty and encourage big institutions to get involved.
Like the ETX we saw.
Exactly. That institutional buying, things like exchange-traded funds, can drive serious demand. And also, kind of the flip side of the gold argument, declining trust in traditional money, in fiat currencies or central banks. That can lead some people to look for alternatives like Bitcoin.
So it seems like while they might both be seen as hedges sometimes, the actual economic levers pulling their prices can be quite different.
Precisely. Which reinforces the point.
Yeah.
There's no single better one here. It really, truly depends on your situation, your goals, your risk tolerance, your strategy.
You know, those analogies we found really help paint the picture, I think. Gold is the grandfather clock of investing.
Yeah, I like that one. Timeless, sturdy, dependable. It protects your wealth over time, keeps ticking away, but it's not going to blast off tomorrow.
Right. And Bitcoin is the rocket ship.
Exactly. The potential for incredible heights is there, absolutely. But so is the very real risk of, a spectacular crash. It's the frontier of digital finance. Appeals to those betting on that digital future.
So wrapping up, in this world that's changing so fast, maybe thinking about a mix of both the tangible security of gold and the high-octane potential of digital assets like Bitcoin might actually be a pretty smart way to think about protecting and growing wealth going forward.
It really might be. And that leads to a final thought, something for everyone listening to maybe chew on. Considering these really unique characteristics, these different roles gold and Bitcoin can play, what specific life event or financial goal coming up for you would make one of these assets seem significantly more compelling right now? It's all about fitting the tool to your own personal journey.
Please subscribe, like, and comment.